Good evening, everyone. It is Sunday evening, the 13th of December. So obviously I'm in casual clothes and I'm just having a look at the market for the week ahead. And this time around, I'm going to be looking at the commodities, major commodities. I'm also going to include digital commodities, so that will include Bitcoin and Ethereum. And so what I'm doing is looking at the metals calendar. And so the most important thing is this coming Wednesday. There's a lot of US news coming out, and the US dollar is generally the one that's traded against major commodities. And so what I'll be looking for or expecting or anticipating or just trying to trade around will be increased volatility around those timeframes. Certainly Wednesday would appear to be the point at which there might be some additional volatility introduced into the markets. So I spoke about this in the currency video that I recorded just before this. We've got FOMC, and so if there are any concerns about the economy, there might be some discussions or hints towards potentially changing interest rates at some point in the future. And that, in that particular case, depending on the situation, would obviously be to reduce the interest rates. And so it's obviously not ideal, but that might then introduce all kinds of other speculation and then potentially impact the market. So I'll be having a look at that. And of course, because when you consider QE or any kind of stimulus packages, there is some potential impact onto precious metals such as gold. So we might want to take that into account. And that's it. Wednesday, of course, also includes core retail sales that might potentially include impacts on metals. And so I think at this point, let's go across and have a look at the charts. Okay, so starting off with gold on the daily. So to recap, and there's a separate video on this, which I'll include the link for down below in the description of the YouTube video. So let's kind of talk through this very quickly. We're in a monthly uptrend. We've produced a really nice bullish candle here within at a key level support, 1800, and therefore if we do finish December with as a bullish nice little green candle, then January becomes the very real possibility that gold is going to break the high and head on towards 2000 and then continue on actually towards 2100, 22, 23 and so on. So it's a nice minimum correction. I'm happy with that. At the same time, and this is covered separately in the video, a deeper correction is also acceptable, right? Just because it has a deeper correction, it won't break the trend. It would in fact actually provide more very healthy buying opportunities and also allow the trend to carry on for a much longer period of time. So now this is about letting off steam and pressure. The weekly is in a downtrend. It has produced a bit of an indecision candle here up just below kind of 1900, and so yeah, there's a possibility it could go down. The weekly isn't really offering a lot of clues at this point in time. It's actually not relevant with regards to this. It's really what's going on between the daily and the monthly, because the weekly is not adding clarity. And so if I then have a look at the daily, we're in an area here where potentially price could head low. We've got a couple of both Thursday and Friday had indecision candles. And so this is a point at which the market could indeed head in any direction. Could head down towards 1600, or indeed it could actually potentially attempt to continue up. Or the third option is it could just mess around. It did it before. It did it at a previous stage. So what I'm going to be doing is I'm going to be watching relatively closely. I'm going to be looking outside at the range. Where is my usual? There's something of mine missing that is supposed to be here that's not there at all. So this is what I'm going to be doing. I'm going to be watching the highs and these lows over here. So I've kind of connected those and then just bringing this out. So that's really what I'm going to be watching, is to see how price reacts within that. Should it break below this, it then becomes more probable that it's going to head down towards 1800 again. And then it's a question of, does it hold? Okay, so we've had recent instances where it has managed to do that and stay above support. And so that could be the case now. At the same time, if it does actually manage to break back up above 1850, 1863 and break these previous highs, that then actually means that daily now goes officially into an uptrend. And then it's going to head towards 1900, and then how is it going to deal with that? And so those are my plan A's. Which one do I think is more likely? Actually, price action is almost on the fence. It's not really offering any major clues. If I do take the currencies into account, again, there is that possibility we're going to get a stronger US dollar. We could see gold head a little bit lower. That's a possibility. But I don't actually like to read too much into the currency analysis when it comes to gold. I like to look at gold in isolation because, yes, you can have a strong US dollar and you can have a strong stock market and you can have strong gold. It's an urban myth that they are tied to each other in a particular inversely correlated fashion, or correlated fashion, and there's nothing they can do about it. That isn't the case at all. You can easily break that correlation. In fact, there's more evidence to show that they are not as correlated as we tend to think they are. So this is really going to be looking for, do we break to the downside, head down towards 1800? Does that hold? Do we break through that? But certainly I would expect once we break this low, then I think the tipping point would then become more bearish, and therefore the likelihood that it's going to head all the way down towards 1650, 1600, 1550 becomes a reality. Nothing wrong with that. It can do that within a week or two, and then it's back up, and then, you know, by January we're back up heading up towards 2000. So it's perfectly acceptable, but that is going to be my approach to it. With regards to silver, if I now go and take that same thing here across, silver is likely to follow gold's lead in most situations. It's got a slightly bearish indecision candle. A break of the low, this could see it heading down towards 23. You can see here, and this doesn't mean it'll fail, but you can see here price action is just unable to really it's getting solidly rejected by 25 at the very least. And so on a monthly basis, might just not be able to do that. What it should actually have done, in my opinion, is come down to 21 and connect to that and carry on. So in the same way that I think it would have been great for gold to connect to 1600, I think it would be right and proper for silver to connect to 21. I think there's a ton of buy orders here. And actually, I even think that silver has the potential to go down to 19. So 21 or 19 to me, and therefore 21 to me would be the minimum acceptable correction on silver, which was overextended. But, you know, the markets will more often than not do that, but they don't have to. They're not bound by it. So this week, again, what I'll be looking for is to see if price drops below 23 on silver, potentially hits lower. If it doesn't, if it starts breaking the previous high, then it heads up towards 26. And I'll be looking for intraday opportunities on that. But as it starts, I'm not really going to take action until I see it actually start to show where it wants to go. Looking at copper. Copper has produced an indecision weekly candle, and therefore there's a possibility if we break the low of that it's likely to come down towards 3.3, 3.25, and it's overdue for it. I think I'd like it to do that. And again, it's produced a bearish candle on the daily just after a most recent high, and usually when you get some potential divergence, bearish divergence on that MACD isn't, RSI is a little bit, that could imply that it could fail, but then would have to fall through 3.45 and head down from there. Certainly on that monthly basis, it's gone almost straight up, and therefore a pullback or a retracement here would also be very acceptable. Yes, I mean, it's possible that in 3 months' time we could look back and there could just be the surge across metals, and they've all just climbed, ridiculously much more than they would have. Gold, thankfully, has let off some of its steam. So gold, I'm happy with. That doesn't have to do anything and continue up. Copper is now entering overpriced. Silver would just be smart to take its time, and silver isn't really a star instrument to be traded by comparison to gold anyway. So platinum. Now we're talking about trading, by the way, not investing. So trading is just in terms of that. Now, interesting, looking at that price action here, platinum is really struggling to get past 1,000, let's just call it. It's really getting rejected there quite a bit. It is creeping higher. And actually, I'm okay with that to go up, but it is more volatile, and it is struggling certainly with not enough buyers above 1,000 to really carry it over the line. But I would say, of all the ones I've looked at so far, if this continued up, that would actually be perfectly fine. If this just continued up from where it is, and it is in a nice confirmed monthly uptrend as well. Palladium. The monthly is really the clue here. The monthly tells me, and is kind of effectively shouting at me, that there is just, kind of not really enough enthusiasm above this 2,500 level to take it. At some point there will be, but this is where it's struggling with it. And so until it does that, I wouldn't consider this safe for trading opportunities until it gets over the line at 2,500, which is not that far away. Now, onto crude oils. So, okay, onto crude oils. We have a monthly uptrend. We've got high lows, high highs. We are close to $50, which is a significant level. All I'm just going to point out here, and this is why I think that they're not a great idea for intraday traders, is you'll notice that we had a really nice move and a retracement, solid move, retracement, solid move, retracement, then a small move and a retracement, and then a small move and a potential for a retracement. So it's struggling with 46 as a level. and it certainly is starting to slow down a little bit here. Okay, and last week's indecision candle is actually bullish, and I wouldn't even really consider that too much of an indecision. It doesn't really make sense for me to see price retrace just yet. I think it should rather just try and push on, seeing as how close it is to $50. So that's kind of what I'm thinking, but I'm very cautious on this. It's so close, it might as well just do that, and it may actually work its way up, but it's not strong and healthy, because if it was, it wouldn't be doing this messing around stuff. Having a look at Brent. Brent is producing similar kind of wobbles, but also it's very close up to 53, which is its next key level. It's got a monthly uptrend. In other words, the predominant prevailing trend is now more bullish than bearish, and therefore move to the upside makes more sense, but it's really not that healthy. If it was, it would just be ticking its way up, and yet what it's doing is kind of does a couple of days up, then it kind of like wobbles a bit, then a couple of days up and wobbles a bit, and that's not ideal for intraday traders, so very cautious with that. And then of course the same thing when you look at like crude oil, same thing, a move up, retracement, move up, retracement, move up, and this is highly volatile on the lower time frames. But we are very close to $50, and again, it has started to break through that local resistance. I guess what I'm saying is, if I had to sum this up, if it suddenly decides to drop lower or go sideways, I'm not going to be surprised, because it's not showing innate strength. I do think, as I said, the predominant prevailing trend is to the upside, and therefore it should start aiming its way up towards 50. But if it acts up, I'm not convinced yet. So this week, what I'll be looking for is, if I start to see this price action starts to behave in a much more orderly fashion, then I'm going to be looking for buys to the upside. At the same time, if it continues down and maybe breaks through a little low here, breaks through one of these recent lows, then it's going to start to imply to me that potentially it's going to go sideways or go down. And until I see that again, I won't start taking action. Then moving on to Bitcoin. And so Bitcoin is going to take another run at 20,000. I still think it's massively overpriced, and it's due for a big correction. It looks good now, but I think it's going to take another run based off this at 20,000. Price action might just ultimately show some exhaustion, and it could actually do this for a while. It did break through these previous lows, and I'm still anticipating it's going to start to head lower. So I'll be watching for that, because we could have a couple of days where it just drops quite significantly. But certainly the number of buyers in this area is enough to keep it propped up at this point in time. But it's interesting though, because they weren't here then it kind of dropped, and then people stepped in here, and now people are back up and jumping back in the market. So there's buyers getting in and out of the market. But certainly they're skittish around this area. Maybe it actually wants to physically connect with 20,000 before it kind of drops down. But it is absolutely overvalued, and is going to ultimately run out of steam. I mean, could it go further? I mean, it's possible. Of course it's possible. Is it overbought at the moment? Yes, it is. Look, NASDAQ, in my opinion, is also due for a massive correction on the same idea, in the same way, but it doesn't mean that it's done yet. So if there's quite a bit of juice in it, it could keep going. But certainly we are now officially in danger zone, meaning that any trades taken to the upside carry a higher degree of risk that wouldn't exist there if we had a correction and then the market managed to let off some steam. Ethereum is similar. So Ethereum is also going to push up a little bit, but potentially just run a little bit out of steam here. Of the two, the beauty is that Ethereum hasn't gone up to its previous highs, so it's got a lot more potential growth in its future. Bitcoin is going to potentially start to slow down a bit, but again, I'm still bullish in the long run, same as I am with gold. The question is, does it not need to take a bit of a breather before it can go back to that longer term uptrend? And these are very important normal ebb and flow of the markets, and they're overdue, and you can't avoid them. So when they happen, they're going to happen. That's the tricky part of describing when it's going to happen, but they always happen. They're unavoidable. It's just part of the makeup of the market. You can't just keep going up. Eventually, people who've been making money take their money out of the markets, and they shift from buyers to sellers, and then it heads down, and then nobody else can buy it because there's no one else up there, and then it drops. This is the nature of the market. All right, so those are the commodities, digital commodities as well, and that's it. I'm going to wrap it up. So as I said, I'm avoiding cryptos for now. I think they're topping out. Oils, I'm going to be watching the 4-hour to see if that orderly behavior returns or not. If they head to the upside, orderly behavior is buying opportunities. Disorderly behavior or dropping lower or going sideways means I won't jump in. And as I said with the metals, copper's topping out as well, but I think platinum has some potential. And gold and silver, I'm going to be watching breaks above and below certain key levels. And there we go. Thank you very much. Have a good week.